Joining us here on set now is Strategas Head of Technical and Macro Research, Chris Verrone. Chris was ranked as #2 macro analyst in the 2023 Institutional Investor Research Survey. Congratulations. Thank you. But we're going for #1 this year. So should investors be worried about the small caps?
No, I think they should be embracing how, if you look at the last 6 weeks, the only crime the small caps committed was they chopped. They went sideways. After a 30% move in November and December, I think that's hardly a reason to be bearish on the small caps here. You have IWM breaking out above 200 over the last several days. The last 3 days in small cap world have been really, really impressive. And think about what drives that move. Biotech, second largest weight in Russell 2. The banks turning up from an oversold condition here. So I think, if anything, all this talk about how narrow the market's been, it's overstated. The small caps are getting better. The equal weight S&P just made a 2-year high. This idea that it's just 5, 6, 7 stocks driving this whole thing, I think, is misleading.
So let's say you've been textbook up to this point, and you've owned primarily the S&P 500 over a pretty long period of time. You're feeling pretty good right now, feeling pretty smart. But maybe you're feeling like you ought to diversify. What do you prioritize here? Moves into fixed income because rates probably aren't going higher. They're probably coming down, and bonds might behave better from here, or do you go into certain sectors?
Well, I think on the rate side, the persistence from some of the market's most speculative corners, whether that's Bitcoin or whether that's small cap biotech, is suggestive that bond yields probably aren't going a ton higher from here. I'm looking at 420 to 440 as kind of the top of the move in bond yields. And then when you kind of look elsewhere around the world, let's not forget how much global confirmation there is. Again, this is not just the U.S. market going up. You've had new highs in German DAX and French CAC. You have maybe the beginnings of an early turn here in China. You see that more domestically right now with stocks like LVS and Wynn breaking out. You see it with maybe a hint of life from Starbucks and Nike. So there's these little clues, I think, globally that it's more than just U.S., more than just NASDAQ, more than just NVIDIA.
So does that make cyclical parts of the market look more attractive? I mean, we're seeing industrials move higher right now. We're seeing areas within consumer discretionary move higher. I mean, is this something that can continue to happen?
Morgan, last week you had more industrial stocks make a 52-week high than at any point we've seen over the last 5 years. I mean, that's not a narrow market, right? And if you look at every sector, industrials have the highest correlation with the market itself. So when industrials are working, you're generally in a pretty good tape. You've seen an expansion in discretionary new highs. We always pay a lot of attention to the discretionary versus staples pair. That's making new highs. So if the market's still rewarding the more cyclically oriented parts of the consumer space, you would generally say that the market believes the path the economy is on is still okay. That's the status quo. We always look for changes. We're always aware of what could upset the status quo. But I think by and large, the trend here is intact.